everyone. If you can hear me, please type yes in the chat section. All right, thank you. Good afternoon once again, everybody. I welcome you all to this insightful session. Welcome to P4PETalks. Quickly, I'll run you through what P4PETalks is all about. P4PETalks is aimed at developing professionals, individuals, and teams using expert insights that are appropriate for personal development, business growth, and career advancement. So on a weekly basis, we host webinars that are targeted at helping out with personal development, business growth, and career advancement. In the past, we've had participants share their testimonies about how our webinars helped them to grow in all facets of their lives. All right, and I'd like you all to know that this webinar is powered by P4PE Institute. So what do we do in P4PE? We provide cutting-edge solutions. We bring professional and business discipline standards and rigor to HR functions. We're a Nigerian company with a global outlook, and we deliver superior people, clients, and shareholder value. These are our brands. To mention a few, we have a conference coming up on the 12th of February, and it's called HR Outlook. This is a conference that brings together various HR professionals, and at conferences like this, we share topics that are pertaining to the HR space and things that people need to know to grow their career as HR professionals. We've enjoyed the endorsement of HRCI and Value Builder, and our solutions are HR solutions, career solutions, business solutions, entrepreneurship solutions, talent management solutions, and we have a series of training programs. This is one of them. I'm your host. My name is Damilare Ojo. Before I introduce our facilitator for today, I would like you all to know that the topic for today's webinar is implementing HR metrics and analytics using MS Excel. I'm pretty sure that you all have questions you want to ask. Kindly type it in the chat section so we can hear our facilitator clearly. Now I'll run you through the session protocol. Please mute your audio and turn off your video. You may speak on the facilitator's invitation. You're required to speak only when the facilitator requires you to do so. Questions, comments, concerns, or issues generally are to be typed in the comment section, meaning no one is allowed to talk until the facilitator bids you to do so. Our facilitator today is Mr. Joel Emeke. He's a vibrant strategic HR practitioner. He has unique depth in employee and organizational performance management, talent management, and corporate academy. He has experience of over 17 years across several sectors. He has an experience of 15 years in training and facilitation, and he presently functions as the lead consultant in P4PE Institute. I have the honor to invite Mr. Joel Emeke. If you're here, sir, over to you. Thank you very much.
Okay, thank you very much. Pleasant afternoon to all of us for joining us for this particular session. I hope you can see me. In case if I look like a ghost, I think it's the background that I'm using. Okay, so the session we're going to have now focuses on being able to deliver on your analytics promise to HR by means of looking at the HR metrics. We're going to be examining which metrics are ideal for HR to use the most and be able to demonstrate value to the organization also as much as possible. I'm going to share my screen in a bit so that you can see our conversation. But before I move on very deeply into this conversation, I'd like to ask a few questions to help us to just lay the foundation on our discussion. How many of us currently reports in our organizations using HR metrics and analytics? Please respond via chat. If you currently report on your HR practice using analytics, please respond on chat. Just simply say yes. Thanks. Yemisi, Joyce, Kelechi, yes. Thank you. If you currently use analytics or you use Excel, as the case is, to report your HR practice, please respond yes on the chat. Okay, Wifo says no. Thank you, Faith, yes. All right, wonderful, beautiful, beautiful. Excel, yes, great, great. One thing we're going to focus on in our conversation today is to ask deep questions around what metrics should HR focus on that will ensure that results are delivered to the organization. Second, how should we track such metrics? And then thirdly, how do you use the power of Excel to present some of these particular metrics? So we're going to examine all those, and time permitting, we shall practice one or two of those in Excel and see how that plays out also in terms of being able to do this particular analytics. I'm going to show you a few of them on slide, and then we can also go deeply into practice session in a few of those particular cases. Okay, so this particular session is targeted at being able to drive some measure of experience in the use of analytics, and also to create some knowledge, if you are new to analytics, on why the practice of analytics and how analytics is evolving. And at the end of the session, you will be able to identify metrics that HR uses, and you'll be able to use Excel to present one or two of those particular metrics. So that's the focus and expectation for us on this particular class. Now, I am going to take a section of this conversation. I'm going to look at dashboards, and then I'm going to look at how to create some pivotal tables on this particular program. Robert Kaplan wrote a book. Maybe you're familiar with that book. The book is called The Balanced Scorecard. He has gone on to write other books thereafter. But in The Balanced Scorecard, him and his co-author, David Norton, they said that you cannot manage it if you cannot measure it. You cannot manage what you cannot measure. Whatever it is you cannot measure, you cannot manage. You cannot measure what you cannot describe. Now, the beauty of analytics is that it helps you to describe things that are happening in your organization. And by means of that particular description, you will be able to either measure it and then be able to manage it effectively in the organization. And the executive management are interested in the stories behind the numbers. So it's not enough to walk up to management and say, look, our attrition rate is 10%. What does 10% attrition rate mean? What does it mean to the bottom line of the business? What does it mean to the practice of the organization? What does it mean to business continuity? So there must be some measure of description behind what you have said to management at that point in time. In terms of what area of analytics you should be reporting, I have 3 levels of analytics that we should pay attention to when we are reporting. And the first one is descriptive analytics. In descriptive analytics, you're describing what is happening. You're describing what has happened already. The second one is operational analytics. You're tracking the business KPIs, the operational KPIs of the business, just as a way to maintain and manage operations of the business. And then the last one is predictive analysis. In predictive analysis, you're futuring, you're forecasting what will happen next, what will happen in the near future, based on the data and what we're seeing currently at this point in time. So those are the things that you're going to see as you make progress on this particular presentation. Now let's look at the first one a little bit in more detail. Now in descriptive analytics, you're reporting basic metrics. You're reporting frequencies. You're reporting things like percentages, like percentage of absenteeism, attrition rates. And you can do this by various highlights on key areas within your organization. Descriptive analytics can be reported on a weekly basis, on a monthly basis, or quarterly, or even on an annual basis. And you can track them using reports. The tools that we generally use for descriptive analysis include a SaaS platform, a Crystal report writer, or Excel. In fact, most cases, it is Excel we use for reporting basic analytics like this. The technique we use for this particular thing is frequency distribution, mean, median, mode, and then percentages. Those are the things that are peculiar that we use for these particular ones. Now, for operational metrics, we focus more on derivatives of some of the HR operational metrics that we track regularly, like time to fill vacancy, training costs, cost per head, cost per candidate that is hired in the organization. These are operational costs that we run within the operational metrics of HR. And how do you track this? Again, Excel is a fantastic medium of doing this. So your mean, median, mode, your variance analysis, your control graphs, your ratios, even percentages are also used for tracking this particular level of analytics. Then the next one is the predictive. The predictive is where you forecast what will happen next. And it is based on historic data. Like if you have access to data, let's say 5 years data of everybody that has left an organization for a 1,000 workforce, you can predict at 80 to 90% success rate who will resign in the next 6 months based on that 5 years historic data that you have had. You can also predict what performance levels will look like, and you can also do your compensation analysis using your predictive analysis also. Excel is still useful at this point in time. You also have your SAS base and other minors. What do? You do regression analysis, you do time series analysis, you do your cluster analysis, and you also do your chart analysis. All of these are some of the analysis you do in order to get the responses, the answers to this particular area. You will notice that for these 3 analytics areas that has been mentioned, the tool that has been consistently mentioned as a tool that can be used is the Excel. Can you see? The Excel here. Excel has been mentioned, Excel has been mentioned here, and Excel has been mentioned here. So on all your analytics, Excel appears to be a tool that is very powerful, and you can use it to do any of these analytics that you have. Consistently, year in, year out, Microsoft continues to improve on the features of its Excel. Today, there are parts of Excel and tools within Excel, like the Power BI, that allows you to do phenomenal analysis and reporting based on that. Now, if I pause for a second and ask, which of these analyses are you currently able to present in your various environments? The descriptive, the operational, and the predictive. Which one are you currently treating? Please respond. Can charts? Okay, thank you. Yemisi says descriptive. Joyce says they're able to do operational. That's lovely. Thanks. Beautiful, beautiful, beautiful. Responses we're receiving so far is indicating that we are able to show descriptives in our various analysis. All right. Thank you. So this Excel helps you to actually do a good job at descriptive. And then you can translate that good job that has been done from descriptive to operational metrics, as it were, at that point in time. Okay, so let's Let's move on. Now, what should you measure? I always recommend measure what provides the highest value. Measure what provides context for the organization, that it makes it easier for the organization to be able to deliver the most value in what they are doing. Measure what you will be able to use to demonstrate that HR is doing very well. And HR can demonstrate that it is doing very well based on three things. One, HR's efficiency. How efficient is HR? So measure things that show efficiency. Two, effectiveness. Measure things that demonstrate that HR is being effective in doing the job that has been given to it to do. And then finally, measure things that demonstrate impact, that HR is having bottom line impact on the organization. So those are the value drivers in what you measure in your organization: efficiency, effectiveness, and impact. Based on this particular recommendation, we have the following three areas to recommend in terms of analytics. The first part is critical talent retention. In critical talent retention, the focus for us is, are we retaining staff? What part of our workforce are we retaining? Are we retaining the critical workforce? Recruitment effectiveness. Instead of measuring recruitment efficiency only, also measure effectiveness. Are we effective in our recruitment? You may wonder, what does it mean to be effective in recruitment? Is it not to bring candidates? Yes, that is very true. In order to bring in employees into the organization, you might have been able to have delivered in terms of efficiency, but was he effective? The person that was hired into the organization, is he a high performer or is he an average performer? Productivity, are we able to drive and pull up the corporate productivity up by one notch, by one level within the organization? And then your compensation and benefits. Are we paying high performers? Are we rewarding our high talents in the organization? Are we paying everybody the same thing? Irrespective of the results you bring into the organization, you get the same value in terms of reward to the organization. Then your performance management. When you measure performance management, you actually demonstrate value in the organization. Management can then see areas of performance improvement within the workforce, within the organization. So these are the 5 areas that you should measure in terms of business results. I'm going to take each of these one after the other and illustrate what we mean by these particular measures that HR should track. Each of them is not just one measure. Each of them is a collection of measures that add up to this particular area. Take, for example, recruitment effectiveness. It is not just one formula or one measure that demonstrates effectiveness. We'll be looking like 3 or 4 of them that demonstrates effectiveness in that particular area. So let's start with the first one, critical talent retention. To look at your talent very well, you need to begin to measure who is leaving the organization and also who is staying back in the organization. You will consider things like engagement. You consider things like development, compensation, line manager. And why do I mention line manager? 66% of the time when employees resign, their reason for resigning is because of poor line manager that they have in that organization. Line managers that are not able to manage very well. So before you can demonstrate critical talent retention, ask yourself if your line managers are able to manage talent very well. Some line managers are talent graveyards. Yes. When you send talent to them, they kill the talent. Somebody joins a particular manager feeling excited and ready to work. 3 months down the line, 6 months down the line, the person lacks energy, lacks interest in the work he is doing because he has not been enabled by the manager that he's working with. In terms of specifics, what metric should you track that demonstrates critical talent retention? Here is the first one. Resignation rate. This is simple and straightforward. We've been tracking this for a while. The second one, resignation rate of top performers. Resignation rate is another word for it is attrition rate. So an organization that has 15% attrition rate means that 15% of its workforce resigns every year. But the question is, which segment of the workforce is resigning. Is it the high performing, the mid performing, or the low performing? You agree with me that if that 15%, the bulk of the people is in the low performing, then it's not an issue. It is good riddance, as the case is. But we're in serious trouble if that 15% is coming from the top performers, from the high performers, because we've lost our ability to deliver results. Our high performers have left us at that point. A third way to measure talent retention is to measure your promotion rates. Another way of measuring promotion rates is your promotion wait time. What is promotion rate? Promotion rate says what percentage of your employees are promoted periodically. Let's say each period is 1 year, and the workforce, the organization is 1,000 staff, and you promoted 50 staff this year. The promotion rate is going to be 50 over 1,000, and that's the equivalent of 5%. So 5% of your workforce is promoted annually. Is it a good thing or is it a bad thing? Think about it. If your promotion rate is 5% annually, what does it tell management? Or what does it tell? It means that in that organization, there are some employees, 5%. Before you finish promoting that 1,000, it will take you about 20 years before the entire 1,000 will have received one promotion. So you see, a promotion rate of 5% is terrible in a corporate organization. Another thing is promotion wait time. What is the average years before an employee is promoted in the organization? For younger employees or employees who are younger in their career at entry level, promotion wait time should not be too long. They should be promoted faster than those who are older in their career, who have spent several years in their career. Why do we say so? Because as you climb up the corporate ladder, vacancies reduce. Opportunities for promotion also reduce at that point in time. So promotion should gradually begin to slow down as you're getting to the top of the organization. The third thing that will help you drive talent retention is your engagement index. How engaged are the workforce? The more engaged your staffs are, the more retained they are. The more disengaged they are, the more they'll be looking out for opportunities outside and want to leave the organization. So measure your engagement index. When you're measuring engagement, there are 5 points on the engagement continuum. There are those who are actively engaged and those who are actively disengaged. What percentage of your workforce is actively engaged? And what percentage is actively disengaged? There are those who are engaged and there are those who are disengaged. And there are those who are neutral. So actively engaged, neutral, disengaged, actively disengaged. Those are the 5 points on the engagement index. Where is your organization lying? Are they tilted towards the actively engaged index? Or are they towards neutral? An organization where most of the employees are at a neutral point, it means that there is no energy in that organization. People do not drive with initiative and do not push for new ideas in that organization. If your engagement index is tilting towards disengagement, it means there are a lot of complaints and issues in that particular organization. And most probably people will be leaving very often from that particular organization. So these, in addition to market compensation ratio, market compensation ratio is now asking how much are you paying as salary as an organization compared to what the market is paying. If for a particular talent that you have in your organization and for a particular job family, if the market rate is 200,000 and you're paying 100,000 for that particular job, it means that the gap between you and the market is 100,000. Tendency is that employees who have this particular ratio in between them will be attracted to the market whenever another opportunity appears. When you combine these 5 metrics we've mentioned here and pull it together, it shows whether you're retaining your critical talent within the organization. And these can be tracked in Excel, and you can show your presentation of your report based on this. Let's look at the second one. Recruiting effectiveness. Now, is recruitment effective? Well, to understand whether it is effective, you must look beyond time to fill vacancy. you will look into also the quality of hire, all right? The business capacity measures that hire has been able to drive in the organization. And then you can say, yes, that they are adding value to the organization, that the recruitment desk, HR, is also being effective in driving recruitment in the organization. Let's look at some things to measure. One, vacancy rate. This is one measure that most people do not measure in their organization. They don't track vacancy rate. Vacancy rate refers to the percentage of roles, positions in the organizations that are vacant. For you to track vacancy rate, your corporate structure must be very active. That means we must know all the positions in the organization that is approved for someone to occupy them. And then we must be able to track department by department which of those positions are vacant. Then we'll know which ones are vacant within the organization. You can then have your vacancy rate. Again, vacancy rate is number of vacancies, positions with vacancies divided by total positions in the organization. First year turnover rate. So you hired a candidate and the candidate resigned within 12 months of joining your organization. You need to track it. You need to know why employees are resigning within 1 year of joining your organization. That is not long enough for retention. So you need to track that one to find out why candidates are resigning within 1 year. Remember, the cost of hiring a candidate is almost equivalent of his annual salary. So if people are resigning in 1 year, that means you have not finished recovering the money you used to hire that candidate before the candidate resigned from the organization. It makes HR a cost center that is wasteful at that point in time. New hire performance. At the end of 6 months prior to confirmation, what is the new hire's performance result? What's his rating? What's the rating of that particular employee compared to the person that was there before? If the previous role holder was scoring 80% in appraisal, in an objective appraisal system, and you hire somebody new and that person is scoring 70% in appraisal, you will confirm him because he is not underperforming. But you will notice that there's a difference between the current 70% and the previous 80% that we were having before. This variance is a clear indication of loss in value, drop in productivity. We are no longer effective as we used to be. Of course, there is the usual suspect, time to fill vacancy that you have in the organization. Now, if you put these three together, or these four together, it measures how effective HR has been in the organization. And that tells you whether HR is an effective business unit or not. Productivity. Measuring productivity. Now, to measure productivity, our focus is always financial impact of human capital. What is the impact of HR on the bottom line of the business? And there are 3 core metrics that HR should track to be able to tell whether we're having bottom line impact on the business. The first one is return on human capital investment. Return on human capital investment. The question is, how do you track return on human capital investment? To help you with tracking this, you will need to pay attention to your total cost of workforce. It is called TCOW. Let me see if I can write it down. TCOW. Your total cost of workforce. Total cost of workforce refers to total amount of money it costs you to maintain your workforce. If you're looking at my screen, you can see me type TCOW. So total cost of workforce. What is the total cost that we incurred while in this particular organization? That includes your cost of salaries, your cost of benefits, your cost of training, the cost of the HR department itself, and all initiatives you do for employees across the place. Those are part of your TCOW, your total cost of workforce. Okay, so let's make progress. The second thing to measure under productivity is your revenue per full-time employee. So if you go to finance and say, how much did our organization sell this year? and they tell you that in the past 1 year, we have sold 200 million naira. You now say, what is our total workforce? Total workforce is your headcount, your full-time employees. Let's say your full-time employees is 50. So you're going to have your revenue per full-time employee as revenue divided by full-time employee. That's 200 million divided by 50. And that will give you about 4 million naira per staff. That means throughout that year, the average revenue per employee was 4 million naira. The next question is, what is the average salary of each staff in the organization? If the average salary of each person in the organization is say 2 million naira, in that case, salary to revenue is 1 to 2, 2 million to 4 million. That means for every 1 million, for every 2 million naira revenue we get, we'll pay 1 million naira to staff as salaries. So these are metrics HR should be armed with, so we can understand what productivity is. The third one is your profit per full-time employee. Profit per full-time employee is asking, how much money did we make? Profit before tax, before we paid government tax. So out of this revenue that we had initially of 200 million, what if after we paid expense, we paid rent, we paid salaries, we paid operating expense? What was left is 40 million naira. Remember that staff in the organization was 50. So 40 million naira divided by 50 will give you your profit per employee. And that will be the equivalent of about 200,000 naira. That means we made profit of 200,000 naira for every staff in the organization. What does that tell us in HR? For every staff you hire, you add to the bottom line by 200,000. For every poor performing employee you hire, you reduce that 200,000 naira that is added to the bottom line. So you have to be careful about the employee you're adding to the organization. For every employee that is disengaged from the organization, that feels unhappy, that does not pull his weight, it reduces that profit per employee within the organization. Again, we have to be careful with this. This is another metric where we should track. Then the next thing that we should check is our compensation and pay equity. Compensation and pay equity is now asking, how much are we paying compared to how much the market is paying? It's also asking, how much are we paying one staff compared to another staff in the organization? Are we equitable to everybody we pay in the organization? And there are some metrics you can track in this particular area. An example of such a metrics is your performance-based pay differential. Performance-based pay differential is asking, how much are you paying this person for performing compared to what you're paying this person for performing? Your performance-based pay differential. So if Joel receives 200,000 as his performance pay, and another employee receives 150,000 as his performance pay, what was the difference between these two? The difference is 50,000. Is that not so? Yes, the difference is 50,000. Then you now compare what is the performance of Joel compared to the performance of the other person. What if Joel performed 90% and the other staff performed 60%? Stay with me. Are you following me? So the difference between Joel's performance and the other person's performance, 90% and 60% is 30%. Is that not so? But the difference between Joel's performance pay and the other person's performance pay is 50,000. And that 50,000 is only 25% of that particular variance. You see that Joel is being short paid in terms of performance differential. This is very important analysis you have to make as HR to ensure that we are equitable paying staff according to their results and performance in the organization. There's also the median performance and pay level within the organization. So you also measure and track that one also. Then there is direct compensation and direct compensation increase. Direct compensation is your monthly salary, what employees take home. That particular money that you give to employees in cash, so to speak, by what percentage does it increase annually? That's another thing you have to also check. All right, so those are 3 specific areas that you need to track in order to measure. Then performance management, which is the last one. On performance management, what do we do? you need to see the connections of how our organization is performing and how we are driving results within the corporate business. One way to check this is performance appraisal participation rates. How many employees are doing appraisal in the organization? How many of our employees are getting an opportunity for performance appraisal? Does a year pass by without an employee getting a performance feedback? Note, it is very dangerous in today's legal framework for you to miss having appraisal with your employees, because then you do not have the right anymore as an organization to fire the employee, to lay him off if the employee is not performing very well. You need to show documentary evidence over time that the employee has been struggling with being able to perform at the level of expectation for him at that point in time. So check your performance appraisal participation. The second one is your top talents. What percentage of your workforce is top talent? And so let's go back to that our organization. Assuming we have 100 staff in our organization, how many of these 100 staff are top talents based on the way you define talent in your organization? If there is 12 of them, 12 persons who are top talent, then your top talent is 12%. Ideally, the average good organization, high performing organization, has a top talent of 20 to 40% who are top performing individuals, top talent. If you have less than 20% as your top talent in your organization, then you're struggling to deliver the best result in terms of performance within your organization. You must make sure that at least 20% of your workforce are top talent. If you have less than 20% as top talent, then you need to do something in order to ensure that you get them up to that level, or you go outside to hire and replace the people who are not performing at that particular level as expected. Then turnover, we spoke about turnover when we spoke about retaining top talent, retention in the organization. What percentage of your low performing staff are resigning, are leaving the organization? What percentage of your high performing staff are leaving the organization? And so, like I said, if you have more, again, let me go back to my drawing. If you have more of the top performers leaving, is a trouble. You're in serious trouble. So here is a graph, assuming this is a graph. And then if I draw a graph like this is a bell curve. Okay, so this is a bell curve. So here, if I put here like this area are your areas of low performance. And then this area are your areas of high performance in the organization that are able to deliver results. And this is the medium. This middle point now are the middle. And those in the middle, those with average performance. Now, your low performers, these people who are here, what percentage are they? And what percentage of them are leaving the organization, are resigning and going out of the organization? Here, your high performing individuals, what percentage of them are being retained in the organization? The more you lose from these high performers, the less the organization can produce results. So you need to track this to ensure you're able to deliver the kind of value you expect that you should deliver in your organization as much as possible. Then performance rating distribution, which is exactly the diagram I have here. How many persons are on the lower end here and how many persons are at the high end here? For some organization, again, let's go back to our drawing. For some organization, they are low performers. This is low performers. Low performers are so many. All these people here are low performers. So it is wider, it is higher. But the best is organizations that have a high level of high performance, who their high performers are almost half. Remember I said 40%, not just 20%, where you have almost 40% of your high performers who are on this particular side of the organization. And this delivers more results for the business as much as possible. So what percentage of your high performers do you have at your distribution within the organization? So those are, let me quickly go back. Those are the talents that you need, the kind of tracking, the 5 metrics to HR very well as much as possible. If you have any questions on these 5 metrics as I make progress, let me conversation on the dashboard in terms of Excel. Now, when it comes to Excel and analytics, what does your Excel, what can the Excel do for you when you're tracking results? You can gather data on staff demographics. You can gather data on staff demographics, on your pay, on staff engagement, on performance, on recruitment, and other levels of employees. Bring them together and do an analysis based on that, and then produce a report within the organization of what is working and what is not working at that point in time in the organization. Let me take off this, my drawing. All right. So you can then do your analysis and then decide how best to manage things within your organization. And then use Excel and a dashboard to show how these things are working within the organization. Here is an example of a dashboard. This particular dashboard is built with Excel. It's a balanced scorecard dashboard for a corporate organization, corporate performance measurement. This is an Excel dashboard, and you can generate this, feed it the data that you need. As data continues to change, everything here changes. And in one view, management can see exactly what is happening and be able to deliver value and results as much as possible. Here's again another dashboard, also delivered in Excel, built in Excel. This particular one shows you our recruitment. It shows those who were hired, applications we received per hire, the number of days it took us for hiring, and the cost for hiring, the number of open positions we have currently now, and the days those positions have been open in the market. There are other metrics involved here. You can track with one dashboard in Excel how your recruitment desk is doing very, very well, as much as possible. This is another version of a dashboard for hiring, your hiring dashboard, and it shows you the number of open positions you have, the number of applications you've received so far, the number of candidates that were recently added that we received applications from, the number of outstanding offers that has not been made, the number of candidates who have resumed, who are currently being onboarded in the organization, and other metrics that you can find within this particular place of the organization. So these can be generated in Excel, in your Microsoft Excel version. Now let's specifically look at some basic analytics that has been done in Excel, and then we can wrap it up here. This is an example of the revenue per full-time employee. Remember we spoke about it when we were looking at your productivity, revenue per full-time employee. So this is a basic measure of productivity, and it provides a general estimate. Although my graph is looking small, but if you can see there very well, this is showing us the graph on the data that we captured. Quarter 1, quarter 2, quarter 3, and quarter 4. And then on this other side, where you then have the values that we got at that point. What is the total number of staff we have? And then what is the total revenue? That's the spreadsheet that we got, the Excel sheet that we got. Based on this, you can then plot a graph. The first quarter, what is revenue per employee? Second quarter, third quarter, and then fourth quarter, our revenue per employee. And you can also plot the same thing on a monthly basis, January to December, and then you see the revenue spread per employee. If you look at this graph very clearly, you see that in the third quarter, we have the highest revenue per employee. You can begin to ask questions. What happened in these 3 months? July, August, September. What happened in the organization in these 3 months? And why did it drop? So analytics will help you to notice some of these things in the organization. Then there's also HR return on investments. And HR return on investment measures your revenue, your operating expense, and your compensation and benefits within the organization. And it's asking, what return did we get to the business? And again, here is an Excel sheet here that captures all the data that was used to make this analysis. And then we're able to do our revenue and our HR return on investment. You notice that we had the highest returns in the months of June, July, August, and September. Again, you begin to ask questions, what happened within this particular period in the organization that we're able to save more or invest more or make more money in the organization. Then there's your benefits statements. You can also check your benefit statement. How much are we paying for medical? How much are we paying for pension? How much are we paying for this? And then compare them side by side. And you can then see the total amount of money that's been spent in terms of benefit for employees. You will find detailed information for the total health and welfare benefits, paid leave, state leave, federal leave, everything that has been adjusted and paid to employees. It's easy for you to display and demonstrate this value by means of this. I have shown you a template earlier. Here's a template you can use in Excel, and this is a functional Excel template. It shows you the total number of offers that were accepted by employees, total number of applications that we received, the position title, which of the positions you're hiring, and it guides you through an ATS platform to be able to achieve this. So you can be able to also deliver this particular value as much as possible. The same thing too for our employee turnover dashboard. You can track how many employees have left the organization month on month, quarter on quarter. Like this particular graph is showing us, this is the total head count. This is those who have left in this particular quarter, and then across that particular way. You notice that by this graph, there are more people who resigned in January, if you look at this, than any other month. Same thing too in February. Question, why are staff resigning? Why are so many staff resigning in January and February? This will help you, this kind of graph and analytics will help you so that as you come close to January and February, you can prepare so that you're not caught unawares and then be able to address this concern as much as possible. I'm going to take you through a practical session on Excel. Before I do that, let me just take some of 5-10 minutes, and then we'll just look at one of the Excels. Okay, so Joyce is asking, is it full-time employee or full-time equivalent? It is both. There are some organizations that don't separate full-time employee and co. But anyone, either of it can be full-time employee, can be full-time equivalent. Full-time equivalent includes staff who are working full-time. They are not contract staff, but they are, again, they are not your core staff. Then Ngozi is asking to please explain for that direct compensation under the compensation and pay equity. Now, direct compensation refers to every amount of money you give an employee directly. You give him in cash, not in kind. Sometimes it's called salaries. It also includes bonus, includes commission, all right, that you give to an employee. Every cash-based reward given to an employee is referred to as direct compensation. It includes his transport allowance, his housing allowance, his telephone allowance, and his basic pay. It includes his leave allowance. All of that put together, and his bonus are his direct compensation. Now we are saying this direct compensation, by what percentage is it increasing every year? You also asked what is the implication if the issues are inherited. Well, if you inherit any performance-related issues or any other business-related issues that has been thrown up in HR, you need to identify solutions to it and guide management to implement it over time so you can gradually walk away with those particular issues. No matter the issues that an organization you find in an organization, they need to be addressed so that the organization can be healthy and clean in order to deliver the kind of result it expects to deliver at that point in time. Okay. All right, so I'm going to stop sharing this screen now and then share an Excel sheet so you can see so this is an example of an Excel. If you can see this Excel, please type yes. You can see this Excel. If you can see my share screen, please type yes in your chat box. Okay, beautiful. So this is an example of a human resource KPI, a dashboard that has been set up for a particular organization, and it is done completely in Excel. The dashboard is completely done in Excel. Okay, thank you everyone for responding. All right. So if you look at this here, the KPI here, we have KPIs. We are able to track all those 5 measures I mentioned to you. Some of them are being tracked here. So you can track all of them and measure them effectively. In this particular one, for example, we're measuring recruitment, we're measuring training and development, we're measuring performance management and career management, we're measuring employee retention and productivity. Okay, so those are the 4 that is being measured in this particular case. On this side, we have the monthly measures. This is the previous year at this time. This is the target. The target here was 26. The actual was 29. That means we did very well. All right, target versus actual this year and last year. We did about 109%. However, in this particular case, average new hire performance, we expected new hire performance to be at 9 points. That's 90%, but currently the average is 84%. So we are doing 93% of expected results. So this again is showing us the extent how good we're doing in this particular area. And then this is the cumulative. The cumulative is year to date from January to the month in question that we're checking at this point. You can always change months. This place here, there's a drop down here. You can change any other month that you want. You can change another month and then use the month to compare and see what kind of results that you can get at that point in time. All right. Each of that change will reflect automatically on the Excel. For training, we are tracking training hours. We are tracking productivity change after the employee returned from training. We are tracking training satisfaction, whether the employee was satisfied with his training at that point in time. For training hours, we say we should do 57 hours per employee throughout the year, but we have only done 34%. That means we've done 59%, almost 60% results. In terms of productivity change, we expected productivity to change by 37% when they come back, but it only changed by 25%. Were employees happy with the training? We said 90% should be happy, but we got 92% that is happy. So that is why 102% that was successful. So that also goes down. And you can see everything here, the various KPIs. So this is an example of an Excel dashboard, an Excel analytics that is done within Excel. This is an example of both descriptive and also the analytics part of Excel, the 3 that we mentioned earlier. This is not prescriptive. So it is not forecasting into the future. It just simply describes and analyzes the status quo, what we have seen on ground at this point in time. Then there's a chart. So I generated a full-time chart in this particular area. Using this data, a chart was generated. So you have here the previous year, the target that we're supposed to achieve, and then the actual that was achieved. Based on this chart, what I'm looking here is training and development. Training and development and training hours. How did we do in this particular area? So that's our training and development, year in, year out. This is previous year. This is the target for this year. This is the actual that we did at this point in time. You notice that our actual did not catch up to our planned execution, but our actual this year is better than what we did last year. So clearly you can show by the means of this data that HR is having impact this year more than it had impact the previous year based on the results that they have done effectively at this point in time. Again, the dashboard is automated. You can click on these buttons here. It jumps to the other section. I can go back again to that particular dashboard. Now here is the raw data of the current year. So current year, this is the data we've captured so far. We've captured data on January, February, March, April, May, June. So we have data up to June. That's where we have data on this particular organization. You can also jump to the current year target. This is the target that was set. So you can put all the KPI that was set in the year here and use it to be able to measure results and track impact. And then this is the actual here from last year. That one is not active. Past year actual. So this is past year actual, the data on past year actual that we did also. So this shows you in full view that you can actually create analytics platforms on Excel by being able to bring the data all together to be able to deliver this particular result as much as possible. So I'll take your questions. Any further questions? Yes, any question? Whatever you've seen in this particular presentation, you get the PowerPoint presentation, you also get this Excel sheet also. So you can use it to further practice and do the things that you want to do. You also have access to the video, the recording of this particular class, so you can watch this conversation again. So any question? Now I'm sharing a live session, an agenda for a full-blown training program on analytics. This particular agenda demonstrates to you all the various topics and themes that are covered in our workforce and HR analytics using Excel program. It's usually a 4 weeks program. Yes, a 4 weeks program, twice in a week, about 8 sessions altogether. In these particular sessions, there are pre-session videos. There are some materials that you go through, video-based materials that you go through in preparation for the class. And there are assignments that you do that helps you to understand Excel. In case you don't understand Excel very well, the assignments we provide to help you to learn Excel. Then there's the core course discussion that where we'll now look at what is analytics and how to use that particular analytics effectively. Then we'll now look at your various HR analytics class session and case study and activities. And then we'll also see how to clean up data. Because if you don't clean up data, you cannot perform analytics experiments using that particular data. So we'll see how to clean up data in Excel to be able to do the kind of calculations that are required in Excel. This also continues to an introduction to analytics. We'll look at introduction to recruitment analytics. We'll build a recruitment dashboard. We'll build an ATS platform in Excel and then use that to be able to track your recruitment and the things you do in recruitment. Then there's also introduction to learning and development analytics. We'll look at training analytics and how you can develop an analytics platform for competency evaluation for training dashboard also. Then you also look at employee performance management. We'll see how to conduct performance analysis. We'll have to develop a balanced scorecard toolkit for doing performance review. Other parts of the program include compensation and benefit analysis, effectively aggregating and presenting Excel analytics, that is bringing all the data, performance management, recruitment, compensation and benefits, bring them all together to one dashboard that management can see, and then produce those breathtaking graphs that we spoke about earlier. All right, and then we'll see how dashboards work. So those are examples of the things that we are sharing that you'll be able to use to drive results within your organization. I'll just take your feedback. Thanks, Ngozi. I'm sure my colleague will respond on that. Oh, someone says that they can't see my screen. Oh, I didn't know you're not seeing my screen. So let me share what I was showing. So this was the screen I was sharing. I hope you can see it now. This was the screen I was sharing. I was sharing the plan for that particular program on HR analytics, a virtual class that runs for 4 weekends, 4 weeks, about 8 sessions altogether, an average of 2 hours per session. So I can capture all the things that you need. Of course, you're going to get this calendar, you're going to get the Excel sheet that I just shared with you, and you're also going to get the PowerPoint presentation and the video recording of the session. I'm sure Dami will respond on the date of the program and the cost of the program. The program is somewhere in 2 or 3 weeks time from now, but they will confirm the exact dates to you. Okay. Trust me, guaranteed. This is the second time we'll be running this program. We ran this program somewhere last year, and we had about 52 people in attendance on this particular program. And everybody could then build analytics, could build dashboards on Excel. Again, this is very instructive and very important. If you don't have the money to buy an analytics software and pay annual maintenance fee on it, but you can use Excel and be able to mine data on it as much as possible. Yes, because today's program comes with a certificate. You will get your certificate. So any question on the presentation or what was presented, any area that was not clear, anything you'd like to know that I can share further with you? Okay, thanks. It says we should explain profit to a full-time employee. So let me see if I can explain that right here in this Excel. And I hope you can see the screen. Let me see if I can increase my screen a little bit. So let's assume that this is profit. This is the profit of the organization. So this is year 1. Sorry, let me say month 1. Let's look at 3 months. The profit of the organization is 200 million. That was the example I gave earlier. So the profit of the organization is, no, this is 20 million. So let's say it's between 200 million, no, let's say 2 million and 200 million. So this is the profit of the organization. This is in Naira, all right? Okay. This is full-time employees. Total number of staff you have. Say in the first month, you had 123 staff. In the second month, some people resigned and he had 118 staff. In the third month, you now hired some staff. You hired 10 staff. So you're now 128 staff. Profit per employee is this profit divided by total number of staff. So profit per full-time employee, profits per full-time employee is going to be equal to total profit divided by number of employees that we have. So this is showing us 96,000 naira in the first month, 74,000 naira in the other month, and then 51,000 naira in the third month. That's an example of a profit per employee calculation. Let me change this to currency. So I hope this is clear for you. Yes. So let's look at any other question in the chat box. Okay, so there are a few questions here. Is there any difference between analytics and metrics? Yes, please. Yes. Metrics is just a measure. A metric is a measure that you track and capture. Analytics is a decision you make in arriving at a decision. Okay, so this program did not cover the difference between the two of them. Did not cover analytics, but we mentioned metrics. Profit per full-time employee is a metric. Is that metric going up or is it coming down? Is analytics. What should we do if it is going down? Decision that we take on the organization. Then could you please explain the first two measures under compensation and pay equity again? Okay, so if we'll go back to that, and I'll go back to it and explain it. I'll call up the slide now. Would it be nice to conclude the company was more productive in month 2 with fewer staff than the third month? Yes, very true. You can conclude so, that the organization was more productive at that point in time. But while the organization was more productive and was able to deliver more with fewer employees, the amount of money that was delivered may be small compared to what the target is. Example, if the organization budget target is to make 15 million in that month, and they did only 8.7 million, that means they did about 60% of their budget. So even though they were not efficient in other months, if they add extra staff, so long as those staffs are properly managed, they will increase the value of what they get, and perhaps they will now discover what did we do in this month that we are more efficient, and then we'll deliver better results at that point in time. Okay, so let me respond to the question on the two measures on compensation and benefit. The first one is performance-based pay differential. So let me stop sharing and share my screen. Let me share my screen. I'm sure you can see the screen. So the first conversation was on performance-based pay differential. My explanation is there are some organizations that pay bonus, that pay performance pay to staff based on the results they have produced. If you have that kind of organization or you operate in that kind of organization, I gave two examples, staff A and staff B. Staff A scored 90% performance. Staff B scored 60% performance. Are you following? They paid a bonus of 200,000 to staff A and 150,000 to staff B. That's the bonus that was paid to these two individuals. Now, what is the difference of performance between A and B? A scored 90, B scored 60. So the difference is 90 minus 60, which is 30%. Are you getting me? Now, the pay that was given to A is 200. The pay that was given to B is 150,000. What is the difference between the pay that was given to the two of them? Is 50,000. Now, 50,000 is 1/4. That is 25%. 25% of the pay that was given to A. So A only received 25% higher than B received. That means that A received 5% more than he should have received. So B was overcompensated for his performance at 60% compared to A that was compensated at 200,000. A should have been compensated about 210 to 220,000 naira as compensation. That way, it will have justified the variance at that point. This kind of analysis ensures that there is equity between each employee that are paid some performance differentials in the organization. Median performance and pay level is referring to, that's the second one. Median performance is referring to the pay that you pay employees. Arrange them in order from the lowest to the highest. Which one is in the middle points? It just helps you to know whether you're tilted towards paying a few persons a lot of money, or you're tilted towards paying a lot of people almost the same money across board that particular way. So that's what that median shows. And it helps you to ensure that there is equity in your pay structure in your organization. Okay, would it be nice to conclude that? Okay, so the question says, can I please explain the last one? Okay, so the Bella said to explain the last one, direct compensation and direct compensation increase. Okay, so that's what I said earlier. That direct compensation is everything an employee receives in cash: salary, bonus, leave allowance, all right, commission. Everything an organization pays to an employee, credits an employee's account, is called direct compensation. Everything an employee receives that he doesn't receive in cash, that he receives in kind, all right, is called a or direct compensation. An example, medical. When he goes to hospital, the organization pays for it. He doesn't collect money, but he's treated. That's an example of an indirect compensation. Another one, official car given to him, status car given to him, staff bus that is given to the employee. Those are examples of indirect compensation. All right. Now the question is, to what extent is this direct compensation increasing year in, year out compared to the market? That's what I was asking at that point in time. Okay, so thank you very much. I think our time is well spent today. If there is any other questions, please ask. If not, so we will be wrapping up at this point in time.
Thank you very much, sir. I believe we learned a lot during the session. Okay, so I would like to know if you all can see my screen. Please type yes if you can see my screen. Okay, so the more advanced class will commence on the 22nd of February, and it will last for 3 weeks. So every week we'd have 2 sessions, making 6 sessions in total. And the fee is 105,000 naira only. 105,000 naira only. Like Mr. John mentioned earlier, you learn various aspects of HR and analytics, recruitment, L&D, and every other aspect that you would like to know more about. You'll be building HR dashboards from scratch to finish. So if you would like to register for this course, kindly call the number on your screen or send a mail to info@p4pe.co. The details for this class will be sent to everyone via mail. But if you'd like to register immediately after this class, kindly send a mail to that email address on your screen, info@p4pe.co. Please be reminded that the video and material for this session will be sent to you. We have your mails already, we have your email addresses already, we'll forward them to you before the close of the week. Thank you very much. If you have further questions, please type in the chat section before our facilitator leaves the room. Okay, so Idara, there'll be another class, but it is a virtual instructor-led class. And that will commence on the 22nd of February, like I mentioned earlier. Kindly send the mail to info@p4pe.co to register. Okay, so about the discounts, yes, we would consider you, because you took this webinar, we would arrange something. That will be discussed later. Thank you very much. Any other question before we leave? No. Idara, the discount is for the class commencing on the 22nd. I hope I've answered your questions. Yeah. Okay, so you can all unmute yourselves and say thank you to Mr. Joel.
Thank you, Mr. Joel.
Thank you, Mr. Joel.
We appreciate
Mr.
you,
Joel.
Mr. Joel.
We appreciate this.
Thank you.
Time and the knowledge shared.
Okay, thank you, Mr. Joel.
So I'll type
you.
the email address in the chat section. You can send your mails immediately.
Thank you, Sam.
Okay, is there option for early bird registration that will have discounts?
Yes, please. Yes, please.
Okay, that's fine. Thank you.
And then your certification and your certificates, sorry, will be sent with the materials and the recording. Certificates for this session will be sent along with the materials and the recording.
Thank you. Can we leave?
Yes,
Yes,
feel
you can.
free. Thank you very much. Thanks a lot.
Thank you. Bye-bye.
Thank you. Thank you.